Quick sound check. Quick sound check. All right, I hope everyone is having a good session and are trading the Nifty and the Bank Nifty. It's the Nifty settlement day today, and I wanted to quickly come across and speak to you about a few things which we are observing about specific to the day today, and this is all going to be about intraday and the Nifty settlement at 3:30 p.m. So it's about 12:35. We are in the middle of the day right now. And I have a market profile chart of the Nifty on screen right now. A few things before we go deeper into what is expected, and there is a template at play over here based on the understanding of the market profile and the messaging of the order flow. So a few things just to add a bit of context to what has happened. From the open, I'm not going to go too deep, but we'll focus specific to what has happened from the open, which was at 9:15 a.m. right. So the first thing which should strike you when you're looking at this particular chart on screen is the kind of open we saw in the morning today. And if you're looking at this particular section right here at the top, what you can say is this is a particular type of open which we in market profile call an ORR, short for open rejection reverse. Now there is a very important concept and a nuance over here, and the nuance flows from what we call areas of acceptance in the market and areas of rejection from the market. In fact, the two principal words which you as a trader should be very well familiar with is this concept called rejection and the concept called acceptance. Acceptance means price and value are syncing, are agreeing to what is happening, and rejection means that there is a non-acceptance of what is going on. Right, so I call it an ORR, or in fact, we in market profile call it an ORR, which is short for open rejection reverse. And the key word over there is this word called rejection. Now, rejection of what? Rejection of the higher open, and reverse of what? Reverse of the open. Right. So that concept was that today we had that higher open. Okay, now a couple of things can happen at the higher open. One is the market gets accepted in the higher open and proceeds to move even more higher, because it cannot always stay at the open price, right? The open price is just one parameter out over there, and the market takes that higher open and proceeds higher, or that open is rejected, right? And that higher open was rejected. In this case, the market opened right up at 22,650 today. It went up to about 22,660, 10 points more, but it got a rejection over there. Now this is an excellent trading setup, because if you identify this very well and you understand that there is a rejection happening, you open yourself up to a big trade coming your way, right? So this was what we saw, the higher open today. And we always look at everything which happens in through an order flow chart. So I'll just draw up a 30-minute order flow chart of the Nifty, and this is what has happened right at the open. There has been a lot of green at the open. Okay, and you could make out from the commitment of trade or the COT number which we have, which was signaling that at the open the market was long, and this was not surprising. In fact, even the gap up was not surprising, because we came into the open today on the back of some healthy longs built up from 22,550 yesterday, right? If you recollect in yesterday's tape, sorry, that was 22,450, not 22,550. If you recollect, yesterday we had a gap down in the Nifty, and that gap down went to a level of 22,450, where yesterday responsive buying showed up, right? And through the day yesterday we had a lot of green caught. That means the commitment to the trade was on the long side, right? And there was a lot of IBs, etc. bid. So the market was bid long into the open today. So right at the open, the lower open gap down was rejected, and we had that initiative buying candle over here. And through the day, the market put in a lot of long inventory. So that gap up was not surprising. And right at the open, a lot of traders, including institutions and including sundry other traders, added a lot of longs in the market, right? And the first 10 minutes was completely focused on adding long inventory to the market. The market kept adding a lot of long inventory, and what has happened is that this long inventory was caught in a term we use in market profile and order flow, was caught upside down. That means the positions were not viable anymore, and they had to cut off. So if you see over here, this is what is transpired from the open. The first 20 to 25 odd minutes, the market kept building a lot of long inventory, and this was that breakout theme which was playing out, because we were moving away from a 3-day 4-day range, and the market thought that this was a good point to add longs, and it did, till somebody at 9:30 realized that this was not the case. The market was too lopsided on the long side, and this initiative selling which came in, an IS bar which came in, was the signal that this market was now wanting to go down, and down she went. In fact, the low from this was 200 points lower right at 9:30 on the first IS signal. It would have been 200 points lower, and the market went down to about a level of about 22,420 subsequently on a very red caught. So if you see that red caught kept adding, commitment of trade kept going on the south side. This is the time all that inventory started shutting down, the long inventory, and the market dropped lower to that level of 22,420. Now you would look at this, and the first question you would ask me, if commitment of trade was long, the market was showing a lot of green, why didn't the market go up? And for the very simple reason, it did not go up, because on a higher open we always have to see IBs. IBs are initiative buying candles, and when you see that, there is an added confirmation that the market is adding new demand into the market, which is being confirmed by the order flow. But what we got instead was the opposite of an IB and IS, and whenever an IS signal prints on a higher gap up open, that will tell you that this market no longer wants to get up long. So this is what has happened since morning, and all this is history. I don't want to spend a lot of time discussing on what has happened. So that entire drop is based on long inventory which was added at the open. That long inventory shut down, and we now have seen a low of about 22,420, where a big responsive buyer has stepped up again, right? In fact, this was that RB which is coming at 22,444, and we are seeing this market at about 22,565 right now. So as we speak, there is a very interesting development which has happened over here. Now you and I have seen this, and the market has added a lot of green inventory since that drop to 22,420. There is a lot more of the green caught adding up again right over here. So that supply which we saw is no longer there, and it was not really supply. This was all late supply. It was actually a lot of longs which were in the market. They were coming up. But an interesting thing is happening right here as we speak, as this market is building up new demand from here, 22,500, we are crossing VWAP. And every time we cross VWAP on an ORR, the ORR itself is getting negated. There is no traction left in the ORR pattern right now. So this market now wants to go back and test these levels of 22,610, 630, where where the initial selling has come in. So the first thing I'm going to do over here is, if you don't have a position yet, this is a time to close out all the long puts. We discussed this already, that the market was not finding a lot of supply lower. So now it is time for the buyer. So if you are having short calls, or if you are having long puts in the market environment is now telling you that it wants to probe higher, because we've not defended this level of VWAP, volume weighted average price, which is this green line over here, and this will tell me that it's at about 22,570 right now, and that there is a move pending to about this level of about 22,610, 620, where that initial ISK, right? So the tape is now set to go a little bit higher. We are at 22,570, but we should be putting a move to about 22,620, purely basis on the demand which we are seeing over here. Right now, a few of you who are new to order flow would look at all of this and say, what are these numbers all about? A few of you would look at all this and wonder, what these numbers are all about. And I'm taking some of your questions also live. If you have questions, please feel free to ask me and pause me. I'll be happy to take questions also as we move along. So a few of you are looking at these order flow charts and wondering what these numbers are all about. So the numbers are very simply this. There are about two sets of numbers on these charts, and the numbers on the left would be the numbers dominated by sellers, and the numbers on the right would be the numbers dominated by buyers or demand. There are only two concepts at work over here. One is demand and supply. The second one is supply. And if demand is greater than supply, then price has to go up. And if supply is greater than demand, then price has to go down. Right now, the chart in front of you is an order flow chart of a 30-minute time frame, and we are looking at what has happened from the open of the day, which is at 9:15 a.m. onwards. Right now, what am I looking at is this ORR of the morning has faded out, and we are at 22,577, and we are seeing a move up to about 22,620. And if we get some IBs about 22,620, then we are going to be looking at another move to about 22,680 perhaps later in the day. But the possibilities are large for the day, because the profile is got a lot of information in it, and this is what we call a 313 profile in the market profile. That means there is a thick value area in the middle, and there is rejection at two ends over here. So the D period put a stop to that oncoming wave from 22,620, and now we are seeing the turn of the buyer to step up and have a look at it from the profile point of view. Right, so this is the options table. The call side inventory has been strong since morning. The call side inventory has been very strong since morning, but they need to be a little bit careful as we go into the second half of this session, and we need to be looking at where they have entered positions and whether they are looking at something developing further from there. Right, so the risk is increased slightly for you as a short call holder, purely because the structure in terms of our understanding of market profile signifies a little bit of a higher risk for a short call option. So I'm repeating that again and again, because I'm here to message and talk to you about what I understand about the market. And I've been saying that what you do with this information is completely up to you. I will read out to you, okay, about what I understand about the market, and whether, okay, you want to do the same thing, whether you want to change, whether you want to do the opposite of what I do and what I am saying. It's completely up to you. It's your money, it's your account, and it's your trade. You decide, okay, what you want to do with it, right? So this inventory, which is built up since morning, needs to be careful, okay, because you're going, okay, against order flow, and you're going against the message of the market profile. Now let's add further to what I'm saying. Let's add further to what I'm saying. So I'm looking at the spectrum charts over here. Right, and the gamma 0 is now moved, okay, to about 22,500. That's on the spot. We're looking at the spot spectrum right here at 22,500, and the gamma 0 is about 22,500, which is again telling you that the call side inventory is got to be a little bit careful as we speak over here, right? So this is the positioning of all the big money in the market. As you could see, okay, through this yellow over here, the market, okay, was sliding lower. This was because inventory was getting cut off or shut down as we moved lower, and it's gone flat because that move lower, okay, came to a halt over here, and now there is a shift, okay, in the gamma 0. It's gone back to about 22,500. So the market, okay, is wanting, okay, to go and test that on the spot, right? The previous chart was a futures chart. This is a spot chart. Right, so this is the inventory which needs to be careful here. So the call side inventory as added on the move down, okay, and this is, okay, what is happening. Okay, they have started, okay, to cut down. The put side inventory is building up, okay, not as strongly, but the risk over here is to remain short here on calls, short calls, that is, and that is, okay, what you need to be careful about. You cannot actually win against the message of the market profile and the order flow, and if the market profile and order flow are saying a few things, you have to, okay, pay attention to it, right? Now back, okay, onto this order flow chart. So a lot of people, okay, do not, okay, get okay, what the order flow is all about. And you've seen, okay, these IBs, okay, show up from 1218, 12,487 onwards. This is an IB plus IB pattern. We've moved above VWAP and we are progressing higher. And just keep an eye out, okay, on the COT, okay, which if it keeps adding, we are going to see subsequent, okay, moves higher as well, right? Now a lot of people, when they come and look at an order flow chart, and there are various varieties of order flow charts out over there. The order flow chart, okay, which you are looking at on your screen is the ones, okay, which we promote, okay, out of WeTrender, which we use, okay, at WeTrender, okay, for our trading needs. And just like, okay, there are a number of cars available outside, and everything from a Maruti to an Audi to a BMW to a Porsche to virtually about everything out over there is still called the same word, car. It's still called a car. It's got 4 wheels, it's got a steering wheel, and it functions exactly the same way. They are all called cars, but there are different varieties of cars. And the common mistake a lot of people do when they look at an order flow chart is that they compare, okay, one order flow chart with the other, and without even understanding, okay, how it is being powered and how it is being made, and how it flows and how it moves, right? So there is a difference, okay, between a Maruti and an Audi, and there would be a difference, okay, between a BMW and an Audi, or for that matter a Porsche and just about a Hyundai, or for that matter, okay, anybody else. So you got to understand, okay, what you're looking at. And just because, okay, they are called a car does not mean, okay, that all of the order flow charts, okay, are going to be similar, right? So we believe in working with demand and supply, and in our order flow charts, our central focus is how much more demand is coming into a move higher and how much more supply is coming into a move lower. and at certain points, the demand stops adding up for a move to go higher. Now that is your cue that you want to step out and away from the long side of the market. And at a certain point, as the market moves lower, as we saw today, around that 10:45 to 11:15 a.m. window, at a certain point, the supply stops adding. Right, so that supply right here at about 10:51, the supply stopped adding. That means the price had little ammunition left to progress lower, right? So just have to watch these little things, that just because demand is higher does not mean price is always gonna go up. At certain point, the demand and the supply are gonna meet, they are gonna get equal, and then the supply is gonna start dominating demand. And when the supply starts dominating demand, price starts going down. And on a down move, when there is a reverse happening of what I just mentioned, that the supply stops, the demand starts coming back into the market, and when demand comes back in the market, the market has no option but to move up, right? So this was that IB we saw 22,465 initiative buying candle, and subsequently we are seeing a move up in the Nifty futures, right? So back to where I was in terms of our understanding about where we will be by the afternoon today. So the first thing I'm looking at is that now we are looking up about 22,540. Right, so we are looking at this market now about 22,540, which means this market is not 100% short, though there is some supply at the top right at about 22,610. You need to be a little bit careful of using that short mode which is worked all along since morning, right? The second thing you'll have to focus on is the call writers. Second thing you would focus on is the call writers and what they are doing for between now and close. And when that happens, you would have when that happens, you would have an idea about what to be expected in terms of short inventory, right? So let's look at what is happening from here on. My central number right now is still going to be that level of 22,530, and I would think if this market sustains about 22,530, we have a chance to go up again right up to about not a lot, but right up to about 22,610, and then we'll see if it drops down below 22,530. Then yes, we go back and reevaluate, and we look at this market again from a different perspective, right? I'll take a few questions. Before I close. I hope you all have got the central message about what I wanted to mention over here. It is an important afternoon, and a lot has happened since morning, and a lot more can happen as we move along. So I'll wait over here for the questions, and if you have, I'll take about a couple of them, and then we'll wind up. So the question is, are these order flow charts available? Yes, they are available at charts.vtrender.com. Order flow is a super premium product. Do not confuse it with the normal candlesticks or the bar charts, which are available. This is the demand and supply seen live, right? So what basically typically happens. Okay, let's get a live chart ticking, and we have the order flow chart ticking over here. So what typically happens is that a lot of traders do not have access to full information. So your typical bar, typical candlestick and the bar is hidden with a green color or a red color, right? And the entire volume information which is there is behind that green color and the red color. The green color is because it was an up candle. The red color is because it was a down candle, and you do not get to see this information which is there on your charts right now, the numbers on your screen. And these are the numbers which actually drive your price from the high to the low, or from the open of the bar to the close of the bar. And a lot of traders do not have this information, because this is what is actually transpiring between the highs and the lows. And you need access to this information, because this is data, and this is real-time data and real-time demand and supply, which drives a further edge in your decision making, right? So just get out of that curtain on which a lot of traders surround themselves in. They hide behind a red color and a green color and do not really understand what is happening between or behind those colors. The order flow opens that veil for us, and it tells you real time what is happening between the highs and the lows of that bar you're looking at and that candle you're looking at. And this drives decision making, better decision making, and that's why this is a premium product. Right, so these are available on charts.vtrender.com. If you are a driven trader who wants to see some big changes in the way you understand markets, or you are a trader who's simply not been getting a few things right, that's because you're not looking at the right set of information. You're not looking at the information which is required to drive the faster paced 2024 options market of today, right? So get yourself onto that fast track, make the change. You will see that change happening. So the 22,400 CE broke up above 57, and it's now showing a green call. This is an in the money 22,400 call, and as you can see, a lot of writing was there happening below 62, 64, and we moved up above this. So most of the writing was happening below this level. There is a lot of stop loss orders which have gone here. That's why you're seeing these zeros over here. This is a stop loss market order which has been triggered above 56 right up to about 78 levels, and this will become a support. So anytime this comes over here, expect this thing to come in over here. So the 22,400 is losing open interest also. There was a lot of open interest being added. It's losing open interest, and this thing. So what we are going to be looking at is as we go later in the day, we are going to be focused on the 22,500 CE also, and you can do this. You can draw up the 22,500 CE right here and have a look at this one. Right, so there is a red color IS bar in the so not really a lot of covering happening in that 22,500 CE. If I see green IB bars, then yes, I would know that this one is wanting to run down. So we'll be looking at this as we go on. The COT stays red. That means writers are still in control in the 22,500 CE, and there's no need to change the way we are going to be looking at 22,500 CE as we move for the rest of the day. But have this chart up and keep looking at this. This is going to help you to understand when that call side inventory is covering positions. Right, I'll just take one or two more questions. Yeah, you can have a look at Bank Nifty also. So the order flow is for everything which is traded. So whenever any instrument is traded, wherever on the exchange, there is going to be demand and supply. And as long as there is demand and supply on any instrument, you would find an order flow chart. So somebody asked me, is the Bank Nifty also there? There is a Bank Nifty also over here, right? So you can draw up the Bank Nifty chart, and we have options at the left bottom to either draw up a 1 minute, 3 minute, 5 minute, 30 minute, 20 minute, whatever. I personally have been trading on order flow for about 14-15 years now, and this is the central best thing which has happened to my trading. We are in 2024, and I just said this before, and I'm going to say it again. In 2024, don't trade like how you were trading 20 years back, 2005. The 2005 market was very different from the 2024 market. At least, okay, like have, okay, something advanced, something modern, so that, okay, you can end up as a profitable trader. If you do the same old, you're going to get the same old kind of results. If you decide to change a few things about the way you do business, then business results are going to change for you as well, right? So I leave you with that, and if there's anything, okay, else coming through, we will discuss it, okay, on the chat, or okay, we will take it up in the VMR. If you have any questions about the way, okay, you look at order flow, there is also a free if you just go to Google and search VTrend, there is a free workshop, okay, to further, okay, your understanding about how market profile and order flow works. And you can come to the home page and look at this learning video section. This is completely free, okay, for you, okay, to get started, okay, on this road. Market profile is level 1, and you can, okay, move on to level 2, which is order flow, and understand, okay, what this is all about. Remember, okay, the person who has learned it, the person, okay, who understands, okay, what is happening with the markets, is the person, okay, who ends up making money from the market. Information is the driver to riches, right? And if you want to learn, the markets are going to be always kind to you, and they're going to be always supporting the trader or the business person, the individual, okay, who's making learning the priority for himself, right? So this particular section, right, at vtrender.com, our learning videos are gonna be assisting you. You can also go through, okay, a few of our blog articles, the must read section, and we've spoken, okay, about the way we understand markets and what you need to do, okay, with that understanding of the markets, right? So I leave it over here, and we'll do a few more of these sessions. Okay, if there are any questions, okay, please feel free, okay, to shoot them to me. Thank you for joining in, everyone, and I wish you the best as you navigate the rest of this settlement day.